Good afternoon to those of you connecting from Singapore, and good morning to those of you who are logging in from the UAE. First and foremost, let me acknowledge our VIPs in attendance today. Your Excellency Kamal Viswani, Singapore Ambassador to the UAE, Mr. Lee Yi Shin, Patron of the UAE Singapore Business Council and Chairman of Business China, Dr. Brian Sugar, President of the UAE Singapore Business Council, Mr. Kwa Boon Wee, Vice President of the Singapore Chinese Chamber of Commerce and Industry. Distinguished guests, ladies and gentlemen, my name is Sultan Naimi from Buruj, representing our co-organizer, the UAE Singapore Business Council, or better known as the UAE SBC. It is indeed a great pleasure to welcome you to the first ever collaboration between the UAE SBC and the Singapore Chinese Chamber of Commerce and Industry, or SCCCI. The event aims to showcase opportunities available for Singapore companies, particularly SMEs, in the UAE despite the challenges of the COVID-19 era. We are indeed privileged today to host a panel of experts representing reputable agencies and organizations in the UAE, namely the Emirates MBD Bank, the Abu Dhabi Chamber, and the Dubai Chamber. Please note that this webinar is being recorded and the organizers will be sharing the video and presentation slides to all attendees. To begin today's event, I now have the pleasure to invite our guest of honor to give the opening address, Singapore Ambassador to the UAE, His Excellency Kamal Viswani.
Hello, hi, good morning, good afternoon. I hope you can see me clearly. Dear friends from the UAE Singapore Business Council, including the patron, Mr. Lee Yishan, Singapore Chinese Chamber of Commerce and Industry, the Abu Dhabi and Dubai Chambers of Commerce, Emirates MBD Bank, the UAE Embassy in Singapore, honored guests. I'm delighted to open this webinar. In fact, this is my first formal engagement with the UAE Singapore Business Council. I thank the organizers, particularly the UAE Singapore Business Council and SCCCI, for taking the initiative to organize this webinar to showcase business opportunities in the UAE. It is important, even as we confront the significant challenges posed by COVID-19, that we continue to look forward and identify opportunities for collaboration. Private sector initiatives like this help to create opportunities for companies for both countries to interact with each other and establish mutually beneficial partnerships, cyber networking, if you will. 2020 is a special year, as it marks the 35th anniversary of the establishment of bilateral relations between Singapore and the UAE. We have strong ties at all levels. We cooperate well because we are both forward and outward-looking countries with a shared commitment to multilateralism. Last year, we were honored to host His Highness Sheikh Mohammed bin Zayed Al Nahyan, Crown Prince of Abu Dhabi in Singapore. That visit saw the signing of the Singapore UAE Comprehensive Partnership. Next year, we'll be participating in the World Expo in Dubai. There was a short video just before this started. Through this landmark event hosted by the UAE, we hope that Singapore businesses will be able to reach to a global audience in the dynamic Middle East region. I hope that we will be able to welcome visits here from Singapore then. On the economic front, Singapore and the UAE have long enjoyed substantial trade and investment linkages. We share many similarities as business, financial, and shipping hubs in our respective regions. In 2019, the UAE was Singapore's largest trading partner among the GCC countries, with bilateral trade in goods amounting to around 21 billion Singapore dollars. Singapore companies have also continued to choose the UAE as an investment destination, with around 3.6 Singapore billion dollars of direct investment abroad from Singapore into the UAE. Singapore companies invest in a range of sectors: logistics, financial services, hospitality, and urban solutions. They're also present across various Emirates, including Abu Dhabi, Dubai, Fujairah, Ras Al Khaimah, and Sharjah. Indeed, there are many opportunities in the UAE across all the Emirates. It is also a good launchpad to engage the region. In this regard, I am delighted to see so many Singapore companies present here today. I told that about 163 participants today. I took up post in February this year, and I'm pleased to know that Singapore companies are well regarded and valued here. Beyond the areas that I mentioned, there's potential in other areas like agri-tech and digitalization. there are also good opportunities for our startups. These are areas that we can grow. Going forward, I anticipate more cooperation, particularly on the innovation and the knowledge fronts. In addition to the similarities that I outlined earlier, Singapore and the UAE both also champion innovation to build our competitiveness. COVID-19 presents many challenges, but it's also created impetus for innovative solutions to overcome them. In fact, COVID-19 has likely quickened the pace of digitalization around the world. In fact, I'm sort of pleased that obviously COVID-19 is a challenge, but it's created impetus for more virtual dialogues and it's brought us closer together in some ways. Going forward, I hope that this webinar will pave the way for more collaborations and exchanges. I hope that our companies will get more familiar with the many opportunities here. I also hope that it will give impetus to physical business delegations when the situation permits. Hearing about this virtually, but coming here, seeing the opportunities yourself, I think that would be tremendous. And I will be happy to host the Singapore businessmen when they visit. I wish you a successful and meaningful exchange of views. Thank you.
Thank you very much, Your Excellency. I would now like to invite the Vice President of the Singapore Chinese Chamber of Commerce and Industry, who is the co-organizer of today's event, Mr. Kwa Boon Wee.
Thank you, and good afternoon and good morning to all. Ambassador Baswani, our ambassador to the UAE, Mr. Lee Yishan, the Chairman of Business China and also the patron of the UAE Singapore Business Council, distinguished speakers, ladies and gentlemen, a very good afternoon. Normally this time of the year is where I start planning my trip to ADIPEC, and this year I was also looking forward to seeing Expo, but obviously we have all of that to look forward to next year. And so I'm delighted to be talking about opportunities in the Middle East this afternoon. And I want to welcome all the chamber members for taking the time to attend this webinar to find out more about the UAE. It's very encouraging that people are looking forward and looking towards a future post-COVID where we can continue to focus on opportunities to grow our respective businesses. I think many members and the businesses that they represent will be familiar with the UAE as a vibrant, as a business destination. It's very much a strategic location for those of us looking to engage in the Middle East. For many years, many businesses have used the UAE as a hub to access the broader Middle Eastern markets and beyond. What I've seen myself through the years is that the UAE has also been very progressive in engaging a policy of diversification so that they are more than just the oil and gas industry, which obviously has dominated a large part of their economic development since its inception. And I think a lot of members will be pleasantly surprised that such diversification has generated opportunities in sectors like tourism, air transport, trade, financial services, manufacturing, food manufacturing, and even clean energy. All these are very much activities that are happening in the UAE. The ambassador has already talked about the economic ties between Singapore and the UAE. And there are more than 300 companies that have a physical presence in the UAE, involved in many diverse sectors, which also include infrastructure, real estate, hospitality, urban solutions, IT and communications, transportation, and many other sectors. It's also encouraging that UAE companies in Singapore have been expanding steadily, attracted by Singapore's pro-business and stable environment and our mutual status as regional hubs. And these companies have also used Singapore as a launchpad to venture into our region. They are involved in the sectors that I mentioned earlier and increasingly a presence in our environment. again, I think in this COVID environment, both Singapore and the UAE governments have demonstrated they've been very proactive in trying to support businesses to tide through this period, and also to look beyond and encourage investments to stimulate the economy for the long term. The UAE, like many other governments, is turning its attention now to safe reopening and getting its economy back in track. And in this recovery process, I think businesses will be on the lookout for new growth opportunity in line with adjustments to the UAE economy. We have a very distinguished panel of speakers today who will be sharing with us on the latest developments and opportunities in the UAE. I will urge all of you to participate actively. I'd like to take this opportunity to thank our co-organizer, the UAE Singapore Business Council, and the supporting organizations, the Embassy of the United Arab Emirates in Singapore, the Abu Dhabi Chamber and Dubai Chamber for partnering the Singapore Chinese Chamber to make this initiative possible. I wish everyone a fruitful and productive session ahead. Thank you very much.
Thank you, Mr. Kwa. Before we start off the webinar per se, let me share with you the outline of our program. For your reference, we have shared an image of the program on the chat window, so you can refer to it at any time. There will be 4 speakers giving a presentation each consecutively. If you have questions for the speakers, you can type the question in the Q&A box by clicking the Q&A button under the Zoom screen. Your questions will be compiled, selected, and answered during the Q&A panel discussion after all 4 speakers have presented. Some of you have already submitted questions in your registration forms. Don't worry. These questions have been noted and filtered by the moderator, and he will be addressing them during the Q&A panel discussion. Please note that if you have questions regarding any technical issue, you can chat with our admin in the Zoom chat window. Without further ado, it now gives me great pleasure to invite our first speaker for this session, the President of the UAE Singapore Business Council, Dr. Brian Shiger. Dr. Brian will be giving an overview of the UAE SBC as a business nexus between Singapore and the UAE.
Thank you very much, Sultan, for your kind introduction. It's indeed a pleasure for me to be here. His Excellency, Kamal Waswani, Singapore's ambassador to the UAE, Mr. Li Shan, patron of the UAE SBC and chairman of Business China and former senior minister of trade and industry, Mr. Kwa Boon-wee, vice president of the Singapore Chinese Chamber of Commerce and Industry, fellow presenters, ladies and gentlemen. Before I go on to my presentation, I also want to put on record my thanks and appreciation to the Singapore Chinese Chamber of Commerce and Industry for their excellent cooperation and teamwork with us in putting together this webinar. I want to in particular put on record my thanks to the team from Chinese Chamber led by Irene, including Tiffany and Kerry, and of course Huda from the UAE Singapore Business Council for their very hard work and cooperation in putting this webinar together. So let me start with the presentation which I would like to share with you. And it is really in terms of explaining to you what the UAE SBC represents. If I may start from the beginning. Let me say that the UAE SBC was set up historically to put together the business community of the 2 countries. And if I may explain a little bit about the background and the history, we were set up in 2018, arising from the very close collaboration that has been established over the years between the 2 countries. The trade flows between the 2 countries are one of the most exciting trade flows in the GCC. In fact, if you look at the trade flows between the 2 countries, it has grown consistently to reach about 21 billion Singapore dollars as of 2019. If we look at the export figures between Singapore and the UAE, we are certainly one of the major exporters to the GCC. And in the GCC, you are from ASEAN, we are the #1 exporter from ASEAN to the UAE. And so we have exports of about $4 billion going into the UAE from Singapore. If we look at our imports from the UAE, again, it is quite a substantial relationship. We import about 11.5 billion, most of it oil, and therefore you would say that UAE is our major trading partner with the GCC, amounting to total trade of about US 18.1 billion. The investment flows between the two countries also have a interesting story to be told. If you look at investment flows, the total stock of investments between the two countries are approximately about 8 billion. The figure for the stock of investment is not easily published, so this is like an estimate. And we have seen some significant inflows into Singapore from the UAE in terms of investments. And I want to point out one major chunky, lumpy investment that has come into Singapore from the UAE, which is really in the form of Global Foundries in their nearly over 4 billion investment into Singapore in the electronic industry. And just a few days ago, there was this report you may have read in the newspapers where Ministers Chun Seng and Josephine Teo visited the factory and acknowledged the important role that the electronics industry plays in Singapore's economy. On the other side, in terms of investments into the UAE from Singapore, one major investment that was introduced, which was announced last year around July, was GIC investing about nearly $600 million into a major project involving pipeline infrastructure in the UAE, including other institutional investors like KKR and BlackRock and the Abu Dhabi Pension Retirement Benefit Fund for ADNOC pipeline projects. But I'm just sort of naming these two major investments. There are other investments into Singapore from the UAE that include, for example, in the airport catering and airport operation sector, Danata, Alpha Group, Port Robinsons, Horizon Terminals has a major tank farm in Jurong Island. And conversely, on the UAE side, ST Engineering, etc. I will talk about some of these companies a bit more later on. So, as I alluded to earlier on, there was this very historic FTA that was signed between the GCC and Singapore in 2013. And this was historic for a number of reasons. It was the second FTA signed by the GCC and the first with a non-Middle Eastern country. And for Singapore, it was actually the second FTA that we signed in the Middle East after with Jordan. So it was a big event for us. And the FTA goes a long way in eliminating tariffs. For example, 99% of tariffs have been eliminated from exports to the GCC. And conversely, as you know, there are no tariffs from imports from the GCC. The other important event was this strategic agreement that was signed called the Singapore UAE Comprehensive Partnership that was signed in 2019 in February during the visit of His Highness Sheikh Mohammed bin Zayed. And this was important because it's the first strategic UAE comprehensive partnership, strategic comprehensive partnership signed with any GCC country. And here the Business Council was mentioned as the conduit for business flows and business referrals between Singapore and the UAE. Well, there are many opportunities for Singaporean companies to go into the UAE. I'm just stating the broad categories here. There are tremendous investment opportunities in the free zones where there are all kinds of attractions for Singapore companies to set up there to serve the region and the offshore potential generated out of having an operation in the UAE, because it's like a hub for the region. And then the non-free zones represent the more domestic-oriented business activities for companies who want to go there. We are also very fortunate. We have a lot of assistance provided by ESG. ESG has various schemes and grants that help Singapore companies to enter foreign markets. And of course, the UAE is a major market as well. And for example, the Enterprise Development Grants helps the setting up overseas marketing presence. And there are many companies that have taken advantage of this, and there are opportunities to for more companies to take advantage of this. And information on this can be obtained from the Chinese Chamber of Commerce SME centers. A little bit about our organization. We have 3 patrons. Mr. Ishan is here. We also have the UAE ambassador in Singapore as a patron, and a resident patron in the UAE as well. And we have office bearers representing the major companies in Singapore from the UAE, and vice versa, Singapore companies in the UAE who are in our EXCO. So these are the members of our EXCO. Their logos appear in all our collaterals, in all our publicity materials. And as you can see, they represent some of the large Singapore companies like Savannah Jurong, Olam, Global School Foundation, etc. And also the large companies from the UAE like ADNOC and Anata and others. We have, as I said earlier on, many companies in Singapore that have open activities in the UAE and are doing very well indeed. Here's a sampling of some of them. Indoguna, for example, is a major food producer in the UAE, and they are from Singapore. Rotary, we all know, is an engineering company that's active there. Minart, likewise. DPA Architects were involved with Dubai Mall, Olam, Sembawang Corp, Charles and Keith, and Bank of Singapore. And similarly, on the other side, these are a sampling of the logos of the major UAE companies that are operating here. Our activities very quickly are meant to really promote, enhance, and support the development of commerce and business initiatives between the 2 countries. We provide a forum for Singapore companies and individuals. We organize various talks and seminars and conferences and networking evenings. And we represent the views of the business community that are interested in this nexus. And we also encourage the building of strong linkages between institutions in both countries. And we are active also in local CSR projects. And some of our talks include presentations from eminent presenters. Our ambassadors have spoken in our quarterly talks. We've had Mr. Ishan as well, and economists and other leading industrialists and experts in the Middle East. Our workshops and seminars cover various sectors. Some of the sectors that we particularly specialize in is in the oil, petrochemical, and logistics sector, where, as you know, the UAE companies are very well represented in Singapore, and ADNOC, ENOC, Horizon Terminals, for example, are major presenters in these yearly seminars. And we have other sectors that we cover, like food and beverage, etc. We believe a lot in CSR. Last year, we believe a lot in being part of the local community in terms of being a responsible corporate citizen. We have collected nearly $50,000 for fundraising that we did during our charity dinner last year for Minds. And we are involved in various other projects with other bodies in Singapore for this year as part of CSR. Our networking and outreach are meant to work or liaise closely with the other chambers of commerce and the trade association in Singapore, with whom we organize networking evenings and events, presentations and discussions. And we believe that's very important to foster a greater understanding among the business community in Singapore in different sectors of the UAE. We organize trade missions, and of course our trade missions have been sort of hit by COVID, but we had one last year before COVID with the Franchising and Licensing Association of Singapore, which was very successful, covering sectors like education, food and beverage, leisure, etc. And this is something that we certainly want to continue going forward. Indeed, we are working very closely towards collaborating with other institutions to organize trade missions around the Expo 2020 event, which has been postponed to next year. And here you have a snapshot of some of the interesting pavilions. The one on the left, top left, is the main one, representing the 3 themes. The one on the bottom left is the sustainability pavilion. The one on the right, which is sort of like a video presentation going on now, is our proud Singapore pavilion, which we want to use for hosting receptions when we bring our delegations there. And the one on the right bottom is the iconic Saudi pavilion. So we will be working closely with the Chinese Chamber and other chambers and trade associations to form delegations to bring delegation to the UAE during this important event in the course of next year, October next year. So really, that's the end of my presentation. Thank you, and back to you, Sultan.
Thank you, Dr. Brian, for your enlightening presentation. Indeed, that the UAE SBC plays a key role in the business relationship between UAE and Singapore. A reminder here that you can type your questions to Dr. Brian on the Q&A box, but the questions will only be answered during the panel discussion after all 4 speakers have presented. Moving on, I would now like to invite our next speaker, Mr. Shadi El Borno, Head of Macro Strategy Research of the Emirates MBD, who will be sharing findings on the impact of COVID-19 on the GCC economy with focus on the UAE.
All right, I'm going to start with an outlook on the UAE economy, then drill down to how metrics have been performing in the wider UAE and in the Emirate of Dubai. I think a quick way to do this is actually just to go through a background of the structure of the UAE economy. As you can see in this slide right now, Dubai accounts for about 40% of the UAE's non-oil GDP. So really the Emirate has been the engine of Dubai, of the UAE's non-oil trade. Services are the biggest component of Dubai's economy. They constitute up to 80% of Dubai's economy. And it's been the fastest growing sectors in the UAE over the last year have been entertainment and creation. We've had other sectors that have been generating growth, including healthcare, education, real estate, services. If you look at it from a regional perspective, the UAE is the most open economy in the region and is a trade hub. Value of total trade last year accounted for 170% of gross domestic product. Re-exports accounted for a total of around 20% of total foreign trade, where Dubai plays really a very key re-export trade hub in the region. The population in the UAE is very diverse, where about 80 to 90% of the total population is expatriate. Now, if you look at the breakdown of the key non-oil trade partners for the UAE, China tops the list at 11.5%, followed by India and Saudi Arabia and other GCC countries. You see the GCC positioning is largely based on Dubai's key regional trade hub status that it carries for the wider GCC region. In terms of the breakdown of non-oil foreign trade, machinery and equipment was led the non-oil foreign trade in the UAE, followed by precious metals, largely re-exports of gold into South Asian markets like India, vehicles, mineral products, and chemical products in terms of imports. You've had machinery in terms of re-exports stopping at 36.8%. and precious metals and stones, again, in terms of the composition of exports, largely again on the back of Dubai building its position as a hub for the export of rare metals. The story so far, definitely COVID-19 has had an impact, but you look at it from a perspective, from a historic perspective, growth in the UAE has actually been slowing since 2014, or moderating, I would say. Oil prices at that point fell sharply, and the US dollar has entered a phase of sustained appreciation. So we've had two big consequences in the region. One, you had fiscal policy adjustment across the whole region. We've seen reduced spending and diversifying of budget revenues away from oil as that big oil bonus, that big oil cushion that we enjoyed prior to 2014 started to close down. And competitiveness did slightly erode, largely on the back of the pegged currency. Now, as government engine government spending, has been an engine of growth historically. This added in with the introduction of new taxes such as VAT has really precipitated that slowdown that we're seeing in the non-oil economy. And you've had prices adjusting downwards across different segments of the economy to try to offset that currency appreciation. Oil prices are key over here. Now we've seen oil prices begin to stabilize around the $40 range for Brent futures, largely as the market balances signs of improving economic data and against this persistent anxiety over the rising levels of coronavirus cases globally. We've seen OPEC begin to taper their oil production cuts and will gradually increase output. However, inventories remain relatively elevated. And the recent data suggests that the recovery in oil demand has actually slowed. Production from outside the OPEC Plus group is set to stabilize, with the US holding at roughly 11 million barrels a day. Prices in the low to mid 40 range may not prompt much in the way of new capacity addition, but will be high enough to allow projects in global markets that have already been developed to resume production. So unless there is greater clarity on the outlook of vaccine of the virus, oil prices will remain subject to considerable downward risk. Now, to look at oil production actually in the UAE, oil production in Q3 for the UAE was actually higher than the OPEC agreed target. It averaged about 22.87 million barrels a day. Now, the UAE has agreed to cut production in Q4 to compensate for this. And indeed, oil production did decline to 2.68 million barrels a day in September from 2.99 in August. Year to date, the UAE's crude output is down 3.5% from the 2019 average. Now, with further cuts in the last quarter of this year, we expect average production of oil to be down this year by 7.5%. And as the hydrocarbon sector accounts for 30% of the UAE's GDP, the contraction in this sector will weigh on headline growth. Key themes this year, before I drill down into the forecasts, the coronavirus impact on both the oil and non-oil sector, which are both expected to contract this year. We're expecting a return to growth next year. Tighter fiscal policy will weigh on domestic demand going forward in most GCC countries, even if the external conditions begin to improve. The UAE is the only country in the region where we expect government sector to actually rise this year. And this is really a reflection of the strong fiscal position of the UAE. Demographics are key. Job losses and pay cuts in the private sector have affected expatriates the most. In the UAE, where expatriates account to up to 90% of the population, this could result in a negative second round effects on domestic demand. And we have to keep in mind that the external environment is improving only gradually. Now, recent data suggests the rate of recovery in major economies is beginning to slow down. Global trade volumes have started to recover, but you do have a lot of downward risks to remain to the fore. Event risks that are looming, the expiration of wage subsidies in the UK, Europe, the complications around fiscal policy in the US, the actual US elections, and Brexit. Now, in terms of economic forecasts, the IMF, I would note before noting down our forecasts, have revised down the outlook for the UAE to around -6% from an earlier forecast of -3.5%. Our own forecasts for this year are -5.5% in 2020, though we do keep in mind there is a potential downward risk revision to that forecast, and that will depend on how economic dynamics perform in the last quarter. The oil sector will contract by 7.5% as OPEC extended production cuts through July. We expect the non-oil sectors to contract 4.6% this year. Total GDP to decline by 5.5% compared to 1.7% in 2019. And Q1 preliminary data shows a minus 0.8% year-on-year contraction in GDP. PMI surveys, and if you look at it on a year-on-year level, it's minus 2.7%. PMI survey data showed a sharper contraction in Q2 as strict lockdown measures were in place for several weeks in the country since April. Borders remains closed to visitors until early July. Now, the PMI survey data is starting to show a recovery in business activity in the third quarter, with headline PMI averaging 50.4% in that quarter. Now, that's important because as long as the PMIs are above that 50% level, they're showing an expansion in activity, which is what we need to see in the third quarter for economic dynamics to pick up. And we expect that to actually gain momentum in the fourth quarter of this year. We retain our 2020 non-oil growth sector forecast at minus 4.6%, with headline GDP expected to contract minus 5.5% this year. Nevertheless, there have been a rising number of coronavirus cases in recent weeks, and the economic data points to slower growth in major economies in the last month. And as I pointed again, we continue to potentially see a risk to this outlook of growth this year. We expect the non-oil sector to accelerate to 2.5% in 2021, but oil production will continue to be a drag on economic growth this year. For 2021, we are forecasting growth of 1.2%. On the budget, we did post a deficit of 6.8%. We're expected to post a deficit of 6.8% this year after 2 years of surpluses. So it's a relatively comfortable position for the UAE. There's been low direct fiscal stimulus at 2 to 3% of GDP in the UAE compared to 40% in Japan, 11% in the US, 5% in the UK, 8% potentially in Germany. If you combine the last two economies, it's about 20% if you include the guarantees. In terms of the UAE coronavirus measures, the focus has actually been on ensuring liquidity in the financial system. We've had $50 billion of interest-free loans from the central bank to the bank to banks to boost lending. We've had 50 billion reduction in banks' required reserves. We've had leniency on loan repayment schedules. Now, fiscal stimulus measures include fee reductions on government services, cancellation of fines, licensing fees, taxes reimbursed to hotels and restaurants, temporary discounts on utilities, release of deposits held by government departments to back to companies, suspension of some road tolls until the end of 2020 in Abu Dhabi, and a 20% rebate in the capital for restaurants, tourism, and entertainment on rents. In terms of how the impact of that bank measures has been on money supply, M2 money supply grew 11.1% year on year in August. So this marks the fastest growth that we've seen since 2014. A main driver has definitely been higher cash in circulation on back of the government measures, although demand deposits and quasi-money growth have accelerated this year as well. Bank deposit growth has accelerated 7.7% year on year in August. Corporate deposits are up 2.4% month on month after 6 months of decline. Gross loan growth was flat month on month, but up 5.5% year on year in August. Public sector borrowing continues to be the main driver of loan growth, with private sector credit declining 1.4% month on month and 1.6% year on year in August. So what we need to see more of is some of these measures translating into stronger loan growth to the private sector, and appetite there would be key. In terms of the travel and tourism sector, Dubai reopened to tourists on the 7th of July. However, the sector will be potentially one of the slowest to recover until a vaccine is rolled out globally. And you've had other countries' quarantine restrictions ease. Hotel occupancy in Dubai is at 30% in July. RevPAR is at $27, even as occupancy rates may rise from August. RevPAR will potentially be difficult to recover until demand from international visitors returns in a meaningful way. More than half of the international visitors to Dubai come from Asia or the MENA region. So the strength of the USD against most emerging market currencies has made Dubai a relatively more expensive destination for these markets. However, we look positively on Expo 2020 next year, and it should help drive a recovery in the sector in 2021. If we look at how the PMIs are reflecting the travel and tourism sector for the Emirate of Dubai, they show them stabilizing after 6 months of contraction. I mean, if you look at the global dynamics, IATA does not expect global air passenger traffic volumes to return to pre-pandemic levels until 2024. So that is why we're continuing to see a gradual recovery in that sector. I kept the slide in just for the reference. I know we're running short of time, of our participants, just to see the role Dubai plays in terms of its transport and logistics sector. An important point I would say about Dubai is that we are seeing business conditions in the third quarter beginning to stabilize. The PMIs average 51.4 in Q3, so this is indicating a recovery in the economy after 2 quarters of contraction. Output and new work have increased month on month since the restrictions were eased, but firms have been discounting prices in order to boost demand. As a result, margin pressures, firms have continued to reduce headcounts. So this clicks back into our earlier comments on demographic, because we're potentially going to see still some job losses in the economy. So this will weigh on consumer demand for some time to come. And as we're seeing in the slide up on the wholesale and retail sector, margin squeeze is impacting the performance of the sector. In terms of the real estate sector, residential prices have declined by 2.1% Q-on-Q in Q3 2020. This is according to data from Astico. Villa prices are down 9.5% year-on-year. Apartment prices fell 10.6% year-on-year. Office sales prices declined 8.5% year-on-year, similar to the change in the second quarter. But the number of sales transactions has actually rebounded by a surprisingly strong 50% quarter-on-quarter in Q3. Largely due to the lockdown and the pent-up demand in the third quarter picking up. However, most of the transactions in the third quarter were on existing properties. Sales of off-plan properties are still down by a third compared to the Q3 2019. Villa rents declined 2% in the third quarter on a year-on-year level, and apartment rents fell 4% year-on-year. Office rents declined at a faster rate, falling 5.8% quarter-on-quarter and 16.8% year-on-year in the third quarter of 2020. Again, potentially reflecting the impact of how office work has changed to work from home. But all of the declines that we're seeing in the real estate market reflect dynamics of the economy, and to be honest, do not reflect a significant deterioration in that market. I think we had the adjustment a couple of years back, so the market is really reflecting demand dynamics at this point. Looking ahead, I'll quickly cover this before ending my presentation. Technology, including fintech, will be potential high growth sectors. The UAE is the largest fintech startup hub in the region. Between 1/3 and 1/2 of all fintech startups in the MENA region. Young population with high internet penetration, 5G, large expat population. Food security and agri-tech are very important. The UAE imports a large percentage of its food, about 90%. So they're working on security, diversification of supply chains, producing more food locally, and becoming a global hub for food knowledge and technology. Clean energy continues to be important. It started all the way back with Masdar. There's a target for 30% of power generation from renewables by 2030. 50% by 2050, and investments in energy efficiency and waste energy, etc. That's it from my end. I'll switch back to the MC, please.
Thank you very much, Mr. Shadi, for your informative and useful presentation. And now I would like to invite our third speaker, Mr. Leonard Tangavello, Country Manager, Asia Pacific of the Abu Dhabi Chamber of Commerce and Industry, International Representative Office in Singapore. Leonard will be sharing information on Abu Dhabi business prospects in the COVID-19 era. Off to you, Leonard.
Thank you, Sultan, for your very kind introduction. Your Excellencies, distinguished speakers and panelists, ladies and gentlemen, a very good day to you. I hope that all of you are in the pink of health and enjoying the time work from home, even if you have to. It's good. Spend time with your family. Anyways, the presentation that I'm going to give today, I hope that after my presentation, I'll give you a bit of an understanding. You will have a better understanding of the economic situation in Abu Dhabi. As well as a bit of a demographic information. Thereafter, we'll go directly into the stimulus packages and just a bit of a brief about the Abu Dhabi Chamber. So I'll share my screen now. I'd like to go into the economy of Abu Dhabi, just so that I give you a bit of a feel. Abu Dhabi's GDP contributed 61.5%, or $250 billion, $49 billion towards the total GDP of the UAE. A lot of it, part of it has to do with oil and gas, and also with industry and commerce. The population of Abu Dhabi, we have 2.9 million residents from 200 nationalities, and they represent about, Abu Dhabi has about 33% of the UAE population. Abu Dhabi has been blessed with oil reserves. We have 94% of the oil reserves within the UAE. And to give a global perspective, about 9% of the oil reserves in the world. Abu Dhabi is also the largest emirate within the UAE, forming 87% of the landmass, or about 67,000 square kilometers. So there's a lot of room for expansion there. A bit into how Abu Dhabi has embraced trade and commerce, especially in regard to foreign investments. This started in the early 2000s. The very knowledgeable and wise leadership of our royal families knew that things need to change. That one of these days maybe oil and gas will not be relevant anymore. So they embarked on an economic diversification policy. So for the international investors, Abu Dhabi offers investor visa of up to 10 years. I think it's the longest in the world, if I'm not mistaken. Another attractive feature would be the foreign ownership. We allow up to 100% foreign ownership, both in free zones and quite recently in 2018, it is also extended to the mainland, where you can take 100% foreign ownership, but to specific industries. We are effectively the safest. I'm very proud to say that Abu Dhabi has just been ranked as the safest city in the world, with a very stable political climate. We have the second fastest port in the world with the Khalifa port, and the infrastructure of within Abu Dhabi, and I must say in the UAE, is second to none for land, sea, and air. Another thing that I would say it's a bit pertinent would be the foreign domestic investments amounted to about $29 billion, and all these figures are in US dollars. So what are we going to do? What is this diversification thing? It is to diversify away from oil and gas. And there are 10 sectors that have been identified. And this will be part of the Abu Dhabi 2030 vision as well, where we are looking at increasing our, excelling rather in agriculture and water, healthcare and education, transportation and infrastructure development, manufacturing. Many of you will be very pleased to know that Abu Dhabi is a very cost-effective place to actually manufacture your products for distribution through the world. Renewable energy and sustainable energy, efforts in the defense and aerospace industry, development of real estate, tourism, which will be hopefully coming back to normal in 2021. The petrochemicals, which is downstream for the oil and gas industry, and a very, very important sector not to be overlooked. And just as my esteemed compatriot from Emirates had mentioned, is information technology. And this would be in all forms of technology, be it biotech, food tech, fintech, medtech, chemtech. Abu Dhabi and the UAE are totally embracing it. So what are the business opportunities and incentives in Abu Dhabi? In December 2018, the timing was quite fantastic actually. Abu Dhabi came up with a Gadan 21 plan. Now Gadan means tomorrow 21. So they were aiming at providing stimulus in the economy for to lift it up and boost it. It was a 50 million dirham incentive package, or 13.6 billion US dollars. Now with COVID coming in, as we all have to adjust, there are 16 dynamic initiatives which will dovetail with and soften the burden for companies due to that, and this is all under the Gadan 21 plan. I have formed it under 6 areas, basically government fee exemptions, people, SMEs, startup initiatives, lending options, again, which was alluded to by my counterpart from Emirates, waivers and rebates, acceleration, accelerators, and capital markets. I would like to go just a bit into the 16 initiatives very quickly, so that you have an understanding of what lies ahead. There will be no, until further notice, there will be no annual registration for government fees. The Abu Dhabi government is putting aside $1.37 billion in water and electrical subsidies to residential, commercial, and industrial properties. And this is over and above the relatively affordable utility rates within the emirate. We'll be subsidizing electrical connection fees for startups that can come to quite a tidy sum. We're exempting all commercial and industrial activities or from the TOFIQ or TOFIQ fees. TOFIQ fees are like tenancy agreement fees, so it's all being waived at the moment. In line with the federal government, the Abu Dhabi government is also embarking on a $817 million SME credit scheme, which is administered by ADIO. And this is to enable the banks to actually lend money, to lend funds or extend funds to private businesses without depleting their capital resources. There will be a suspension of bid bonds for startups and for constructions up to a value of $13.6 million US. Bid bonds are construction bonds. Another interesting measure, and maybe the Singapore government can take something from this, is the waiver of all commercial and industrial penalties. It's adding up to a pretty big sum of $67 million US. All commercial vehicles will be exempted from annual registration fees. In the Emirate of Abu Dhabi, we have exempted road toll tariffs for all vehicles. We will be suspending tourism and municipality fees for the tourism and entertainment industries, which have been very, very badly affected by this pandemic. There will be up to 20% of rental rebates for restaurants, tourism, and the entertainment industry. And finally, there'll be a committee that will be headed by the Department of Finance with members from the Department of Economic Development and local banks to review the lending options to support the economy. So lots of incentives for in place to ensure the continuity of business. And if I can, a lot of these subsidies and initiatives are meant to ensure a concept called Emiratization, that the Emiratis of tomorrow, our grandchildren, our great-grandchildren, great-great-grandchildren, enjoy the same level of life and the same level of living that we do. So very, very progressive in thought. Abu Dhabi incentive scheme, a government incentive scheme, and this, some of them dovetail with the UAE schemes as well. Basically, there'll be a very significant economic support scheme, which is about $67 billion US by the central banks. This is to support the private sector in terms of loans, and also to maintain the capital balances in banks so that they all don't run dry. And I'm very pleased to say that up to 17 banks have already embarked on 100% funding to extend these loans to private companies. The Abu Dhabi is blessed with a sovereign wealth fund, and $20.7 billion will be dedicated to the infrastructure development. Abu Dhabi has a lot of islands, and an example of which will be the tourism industry. We have a lot of islands and we have a lot of space. These infrastructure developments will develop the islands into resorts, develop the desert areas into desert resorts. So a very huge commitment by the government. As also mentioned, we have $272 million AgTech fund to encourage the food sector, be it vertical farming, food security, food production, just to basically technology is the way forward. And another program that we are having is $287 million incentive program to attract startups to establish in Hub 21, which is located in Abu Dhabi global markets for tech companies that are located there. A bit about Abu Dhabi Chamber, an overview. We were founded in 1969, before the formation of the Federation of the UAE. We have 18 local regional branches within the UAE and 2 international branches, one in Singapore and another one located in Korea. You would realize that both of them are in Asia because the Abu Dhabi government is very, very comfortable and very confident of Asia's contributions to the Emirate of Abu Dhabi. We have over 100,000 members. Any person who's been issued a business license from whether it's the public or the private sector are members of the chamber. And as I mentioned earlier, we have members from 200 over nationalities in Abu Dhabi. So what do we do at ABCCI? It was set up, it's an organ of the Abu Dhabi government. It was set up to support the private sector, to promote bilateral trade between Abu Dhabi and, in our case, in Singapore or the rest of the world, that is incoming and outgoing bilateral trade. Before COVID came in, we used to organize a lot. We organized many trade missions to open up Abu Dhabi to the world, to also understand how the world does, the world conducts itself and advances made in technology or just business in general. We organize a lot of commercial activities. And we have, this thing is quite unique. We produce economic reports and market studies for our members. And a very important thing that we also do is corporate social responsibility. I'm very pleased to inform the members, like the UAE SBC and like the government entities within and private entities, we feel there's a need to support the local industry. And this was culminated in April of 2020, where the Abu Dhabi Chamber on its own donated $4.45 million to the Ma'an initiative, Together We Are Good in English, to help individuals and companies affected by the COVID-19 pandemic. We offer a suite of services. I'll just go through it. We are a commercial directory, which is now available virtually to all members. A very unique thing, a very unique service that we offer is legal consulting services without charge. And we are also an arbitration center appointed by the Abu Dhabi government. So we avoid the courts. As usual, we would, like other chambers of commerce, we issue the certificates of origins. As I mentioned earlier, we do market studies and reports, and these are done by the Economic Development together with SCAD, or the Statistical Center of Abu Dhabi, and the other organizations. We are very big in training. We conduct an educational and training seminars. In fact, the Abu Dhabi Chamber has a UAE Academy, which we support. As I mentioned, anyone who is a member will be issued a membership certificate, issuance of membership certificates, which enable you to enjoy the services offered by the Abu Dhabi Chamber. We organize B2B events, and we hope to start it next year. There were 2 missions that were supposed to be coming to Singapore this year. Unfortunately, because of COVID, travel has been restricted. There were about 5 incoming missions from Singapore to Abu Dhabi again, and we hope that vaccine is developed and we can resume activities back to normal. And of course, we have our international representation offices, one located in Singapore and in Asia. As I mentioned, it is a strategic reason due to the stability of the governments in these respective countries, and also the innovativeness of not only the government, but private sectors. Singapore and Abu Dhabi enjoy a very, very strong economic and I would say personal relationship. there's the Abu Dhabi, Singapore Abu Dhabi Joint Forum. It's in its 12th iteration. It was held in December of 2019. It is where the ministers from the Ministers of Economy and the Department of Economic Development get together with our minister, who's Minister Aswaran from the trade industry, and they work on plans to boost international trade. Yeah, so there's a strong presence of Singapore organizations in Abu Dhabi. These include Advanced Holdings, Capital Land, MEO, Minehart, Sabana Jurong, and SD Engineering, companies which are very, very household names in Singapore. We also have about 70 Abu Dhabi companies with Singapore partners. Something that you might not know, that there are about 200 Abu Dhabi companies registered in Singapore, including the Abu Dhabi National Oil Company, or ADNOC, Baruch, which is a company, Baruch, which does petrochemicals, downstream, Etihad Airways, First Abu Dhabi Bank, and of course, Global Foundries, which was formerly called Chartered Semiconductors. So very strong presence of Abu Dhabi companies, big Abu Dhabi companies in Singapore. We are pleased to have partners in Singapore. We are very close with the UAE Embassy, where we promote the UAE agenda. We work very, very closely with Enterprise Singapore, the Singapore Business Federation, and our very strategic partner, which is the UAE Singapore Business Council, where we literally work hand in hand to ensure that the Singapore companies have representation, have familiarity, and together with the Abu Dhabi Chamber, can enter into a foreign land with their eyes open and understanding what to expect. That's all for my presentation. I wish you all well. Take care and stay safe. Thank you so much.
Thank you, Leonard, for your presentation on Abu Dhabi economy and the role that Abu Dhabi Chamber plays in the relationship between Singapore and UAE. And now I would like to invite our last presenter for this webinar, Mr. Hassan Al-Hashmi. Hassan is the Vice President of International Relations for the Dubai Chamber of Commerce and Industry. His presentation will be on business prospects in Dubai and challenges caused by COVID-19. Off to you, Hassan.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, ladies and gentlemen, excellencies. It's a pleasure to be part of this distinguished webinar. I'm going to share my screen here and a couple of slides that I'd like to take you through. Let me start first by thanking the organizers for the kind invitation, and it's a pleasure to meet our colleagues from Chambers of Commerce, whether here in the UAE or in Singapore or in China. My presentation will focus mainly on business prospects in Dubai and challenges that are caused by the COVID-19. I'll start my slides with talking about challenges, and you will notice as I go through these slides that there are a lot of similarities in terms of the challenges between our region, United Arab Emirates / Dubai specifically, and Singapore. The reason why I say that is because we have very much similar dynamics and sectors of focus and economies on both sides. I'll then talk about and emphasize on the importance of a business continuity plan for businesses' survival. It's about sustainable business and how our members here in Dubai have adapted to the changes that we are witnessing. And then, of course, with every challenge, we have two choices. We could either dwell over these challenges and look at things from a negative perspective, or actually identify pockets and areas of opportunities that will take us forward. And then I will conclude with some thoughts and how we can collectively, bilaterally, strengthening the relationship, the business relationship between both sides. Now, there is no doubt that COVID-19 has emerged as the number one global risk to economies, affecting them everywhere, almost everywhere in the world. And Dubai is not immune to that because of the nature of the city. But it is important, as we have seen from other colleagues that have shared, that the government takes the necessary steps and measures to help the impact of the pandemic on businesses. And we've seen many governments, including the United Arab Emirates, either it is on a federal level or a national level, have taken very strong measures to support the private sector. We've also seen that many Dubai companies have implemented operational changes to become more resilient following the challenges that were faced from the COVID-19. Now, although the coronavirus may have created many challenges, it has also indeed created new business prospects and enabled access to trade of new products and new markets, and I will touch upon those as we move forward. Now, from a global perspective, we all know what's going on. We've been following the news. Us here in this webinar are business representatives that have global outreach and have a lot of investments at risk. So we all follow the news globally in terms of the challenges. But here's an example of what this actually meant when we look at medical supplies and medicines, for example, from the period from January to May of 2020, where around 89 countries have applied certain restrictions. And us here at Dubai and the Dubai Chamber, we've also experienced disruption in imports of some of these products. A lot of disruptions also for businesses has occurred on the supply chain, as well as operational continuity. We've had significant impact on sectors that are related to the retail, hospitality, aviation, tourism, entertainment, financial, real estate, and many other sectors. Now, several businesses were forced, whether it is through the lockdown or through the fact that it made more business sense for them to be working from home, reducing cost. So we've seen these trends occurring within our membership. The COVID-19 pandemic also created disruptions in cash flows and reduced productivity. Nothing new there, nothing new here, but of course it's a trend that we are seeing globally as well, impacting many economies. Some companies were faced with challenges in accessing their customers in Dubai as well, due to the lockdown that we went through, or the lack of having an online presence, which brings me to this very important topic of business continuity plan. When we run our businesses, we look at certain disasters that could occur, and not many businesses were ready for something as significant as the COVID-19, whether it is through impact analysis, the recovery strategies that one businesses must have to continue to plan and develop these, and then to test and maintain it. And that cycle, or the importance of business sustainability, becomes essential and at the heart of businesses, that we collectively all need to ensure that it is there. Some Dubai companies had already a very well solid business continuity or preparedness for such impacts, and more were in the process of developing. When we did this survey and we found out such information, they took several measures to mitigate the impact 19 on employees. Many companies offered working from home or working remotely. Some of them still continue to move ahead with this progress of for their private businesses to continue to work remotely. Besides, Dubai businesses provided additional hygiene advice and supplies. We've seen many chambers of commerce stepping up, such as the example that Abu Dhabi gave to support the private sector with their campaigns, the ones that we are doing for our 250,000 members and across our international networks of offices in 12 countries, where we create that sense of awareness to the stakeholders of the importance of this issue. Some companies offered paid and unpaid leave for their employees. Many retail companies quickly and heavily invested in commerce. Interestingly, not many companies from our members, for example, had online presence. We've seen over threefold the numbers expanding during the last 6 months to have an online presence. So if I focus more on prospects and what lays ahead, let me just give you an example of the medical industry here. Every month, fourth-line health responders around the world need supplies, and it is important that we collectively as well acknowledge the incredible work that they put together to make us all feel safe and secure and protect us all from the current pandemic. So shout out to these incredible human beings that are putting their lives at risks for them. But these frontliners, for example, within a month, they consume 89 million masks, 30 million gowns, and you have these numbers in front of you that we got it from the World Health Organization. So the COVID-19 has really created new business opportunities within the whole medical field and supplies, in particular in trading in some of these items that you see on your screen. But here's an interesting fact. The value, for example, of China's export of COVID-19 medical supplies to the United Arab Emirates reached almost 624 million US dollars in between March and June, which is about 357% increase. So we're seeing a lot of growth within the whole medical industry. If I talk about logistics, we've all been there, being locked down, picking up the phone, trying to get our essentials at home. So the demand for delivery and logistic services has expanded quite significantly. In fact, when you look at the Google searches for grocery delivery and food delivery in the United Arab Emirates between the period of January to April, you'll see that has increased by 51% for food delivery and almost 430% for the food delivery. So there's a growing interest in the whole grocery delivery that have forced several supermarkets and others to upgrade their services. We're seeing a lot of online applications that are coming up and popping, mergers that are actually happening within these services, and this will continue to become the trend. So that's another pocket of a sector that we believe it will continue to expand as we move forward. IT services, and I'm going to divide these into three. Remote working, currently we're having this incredible seminar virtually by using certain applications and other providers online, and we see this will continue to expand. Even businesses and ways that we were conducting our businesses will change quite significantly depending on these different applications that are online. You will see us shift slowly from virtual to hybrid before we completely have that face-to-face interaction, but we don't see that actually going to happen. In fact, it will be a hybrid kind of activities as we move forward. And then I need to touch upon cybersecurity with more and more online activities. That also implies risks within the whole within the cybersecurity. So this continues to be the trend, and businesses that are in this field are going to have even more opportunities today put forward their case. E-commerce in general is going to continue to expand, to become more prominent as we move forward, and that's where we come in as chambers of commerce, as a representative of the private sector, to ensure that we create an environment that is favorable for e-commerce activities from a whole global perspective. And of course, another industry that is being impacted positively is the entertainment, on-demand entertainment, virtual reality programming, gaming. Our retailers here within the electronics have witnessed a huge jump in games and in TVs, for example, streaming services and others. Here's an interest on online with games, for example, as you can see, that has been picking up quite significantly. You'll see also growing interest in streaming services. You could be watching a Netflix episode right now while we are conducting this webinar, but it became a source of a venting mechanism when you are limited with certain interactions, physical interactions that are happening, that is necessary. But we see this whole industry continues to flourish as we move forward. And interestingly as well, the way that we do our own businesses, whether it is arbitration, mitigation. We at the Chamber, for example, we started a whole virtual mediation that is happening online now. We're going to see this even moving forward across multiple sectors, such as medicine. The demand on tele and video-based legal services or medications or education will continue to expand as we move forward. So that is my conclusions. I know I'm rushing into these slides because of the time, but really it did create, there's no doubt that there's a huge disruption within the businesses, but then it is important to understand that these kind of challenges also provide pockets of opportunities, whether it is short-term, medium, or long-term, and to view the pandemic more in a positive sense. It's very difficult it's easier said than done, as I can acknowledge this from what I'm hearing from the private sector, but there are truly pockets of opportunities out there. Now, if we scale up a bit more into the way or the source of certain economies, the structure of certain economies. For example, here in Dubai, we have a very strong emphasis on tourism, we depend highly on tourism, supply chain and logistics, financial services, and trade. These will fundamentally become and will continue to be the foundation of our economy, and it's very similar to Singapore in that sense. But then it is the disruption that we are seeing and bringing in the IT and innovation solutions into these sectors that will take us to the next level. We're gradually opening up, of course, after the lockdown. Things are we're seeing positive advancements now. The sentiment is much better. We've heard this from our colleagues at Emirates MBD and others. So we are gradually going to recover. It will take some time, but we are heading certainly in the right direction. And it is only collectively when we meet through what we have here today, through these webinars, share experiences, listen to the private sector, recommend certain laws and regulations to the government, it is only then that we can make a difference and really advance the way we move forward post the pandemic. Thank you for your time, and that was my presentation.
Thank you very much, Mr. Hassan Al-Hashmi. As much as COVID-19 disturb economies, it creates also opportunities. So we have now come to the Q&A panel discussion, part of the webinar. I would like to ask the panelists for the Q&A discussion to turn on your video and audio The panelists for this Q&A session are representing Emirates MBD, Mr. Shadi El Borno, representing Abu Dhabi Chamber, Mr. Surur Sawan, and lastly, representing Dubai Chamber, Mr. Hassan Al Hashmi. I will now hand the session over to Dr. Brian Sugar, President of the UAE SPC, who will be moderating the Q&A. Off to you, Doctor.
Thank you very much, Sultan. You have heard, ladies and gentlemen, three very interesting presentations, and there are some common themes here which I would like to highlight. I would say three themes in particular. The first theme is, yes, the UAE is facing various challenges, and these are challenges being faced by Singapore as well and countries across the board. Two, nevertheless, despite these challenges, there are very interesting opportunities, and they have been highlighted as well. And the third point, which I want to stress, is that the UAE has a very open and warm attitude towards business and investments towards the whole world. And indeed, the whole idea of this webinar is to show that to you, that despite all these challenges, there are opportunities, and Singapore companies will definitely, if they look hard enough and do a survey of the opportunities there, will find that there are business opportunities they can exploit and investment opportunities they can exploit. So we've come now to the panel discussion and a Q&A session. We have received several questions, and I would like to, without further delay, pose some of these questions to our distinguished panelists. You heard a presentation from Leonard from the Abu Dhabi Chamber of Singapore office, and I welcome Shuro Shawan, who's very much involved in the international aspect of Abu Dhabi Chamber's operations, to our panel discussion. And let me start off with the first question, which is directed to Shadi. Shadi, Singapore companies, when they look at the UAE, they also look at UAE as a hub, as a launch pad for the region, in particular, the GCC region and the broader region. Yes, there are challenges being faced by the UAE, but the UAE has some advantages to it. It's a very diversified economy. Oil and gas is just 30% of the GDP. And so the question is, how have the COVID problems, the COVID challenges, impacted on some of the other major GCC economies? Because I think that's of relevance when Singapore companies look at the UAE prospect in terms of the broader region. If you give us a brief synopsis of the broader GCC impact of COVID-19 and challenges faced, it would be very useful indeed. Over to you, Shadi.
I mean, I think the way to look at this is just to look at some of the economic data that we've had out of the bigger economies in the region, particularly Saudi Arabia. Now, we've had preliminary second quarter GDP data for Saudi Arabia. And also we've had data for Bahrain, which showed sizable contractions in their non-oil sector. In Saudi Arabia, the non-oil sector contracted by 8.2% year on year. The private non-oil sector contracted by 10% year on year. In Bahrain, the non-oil sector contracted by 10.7%. You've had hospitality, transport, and trade sectors across these economies badly hit. So what we're seeing in some of the larger economies in the region is the direct impact of COVID on some of the key sectors, but more importantly, the distinction between some of these economies and the UAE is that they're dealing with a double whammy, if we can call it, or two headwinds. One, significant contraction in government spending, particularly in Saudi Arabia, and the introduction of higher taxation over there. So all of that is actually impacting a number of dynamics in the economy. The higher taxes are weakening already weak consumer demand. We have to keep in mind that in Saudi Arabia, unemployment hit almost 15% in the second quarter. So you have rising unemployment in that economy over there. But you've also had significant contraction in fiscal spending in Saudi Arabia, something we've not seen to the similar level level here in the UAE, and that is impacting demand in a region where government spending is a very key factor driving economic growth. It is a factor that will potentially impact some of the growth dynamics of some of the larger economies. Going back to the question of how does that relate to the UAE, it does relate and it does have an impact. If you remember some of my earlier slides, after China and India, the UAE, Saudi Arabia, and the rest of the GCC are the largest trade partners for the UAE. And now this is largely back to the structure of the UAE economy. The UAE handles about 55 to 60% of all non-oil trade that moves through ports into the region. So we're a very big factor in that economic growth picture across the region. So where you see contracted demand in the region in terms of demand for imports, this will start impacting some of the growth dynamics of the UAE trade sector. That being said, I think the advantage the UAE has in the long run is that we continue to see investment and focus on pushing these key non-oil sectors, particularly trade, particularly ports, to solidify their position in the region. And I think you're starting to see some slowdown from some of the potential regional competitors, such as the Red Sea ports in Saudi Arabia, where construction on these projects has slowed down post-COVID. That means the UAE has time to continue to build and invest in its non-oil trade infrastructure to keep its key pole position as a regional trade hub.
Thank you, Shadi. Question for you, Hassan. There is a major disruption going on in the global supply chain. Onshoring, nearshoring seem to be flavor of the month. Dubai's established services hub, trading hub in the region and broader. What role or attractions does Dubai have, or the free zones in Dubai, in terms of wanting to attract global trading companies into exploiting what you can offer in the restructuring of global supply chain?
Dr. Brian, it's very good to see you, and thank you for your question. Dubai is very unique in terms of its position and its outreach. We are, as you know, the commercial, if I may use this word, the commercial capital here with over 70% of our economy relies on services. And I touched upon these four important pillars of our economy, whether it is trade, financial services, supply chain and logistics, or tourism. What role Dubai can actually offer for businesses is taking them to the wider region from Dubai. And this has been the model of Dubai, whether it is to immediately for our nearby markets, or within a span of 4 to 8 hours, you can reach 2 billion consumers. Interestingly, that you've mentioned this, sometimes because we get so many requests and we look at things from sometimes at a narrow perspective, we tend to forget that the economies around us that we're surrounded here with. Africa is one very good example where we are helping a lot of our international businesses and members here at the Chamber to reach into this market. That has been doing really well, considering the challenges that the global economies are going through. So we come in as a city, as Dubai, we come in as Dubai Chamber of Commerce to support businesses to expand into that region. That is the main reason why we have over 60% of the multinationals based here in the city of Dubai. That is the reason why you see the president of that particular company says Middle East and Africa, and he's based here in Dubai. And I think with the expo that we're all looking forward to, companies can, from today, really utilize these current challenging situations that we're in to identify the pockets. The cost of setting up businesses now is relevantly lower than what it was because of the situations that we're in. So really identify what is your business plan and what Dubai can offer you to expand your business, not necessarily just for the GCC, but also beyond that to cover areas such as Africa, where we have 4 offices there as Dubai Chamber, or Latin America for that sake, where we have 3 and 1 coming up very soon in Mexico City. And also, of course, the wider region through Dubai.
Thank you very much, Hassan. That's certainly very reassuring. Now, a question for you, Shuro. Abu Dhabi is indeed quite blessed. It has got oil resources, gas resources, the richest emirate. But we have seen oil prices come down quite drastically from around $70 in 2018 to around low 40s at the moment. And this obviously has some impact on the revenue flow for the Emirate of Abu Dhabi. But yet you have, of course, a very ambitious plan, GADAM 21, etc., as we've heard in the presentation earlier on from your colleague. How has this drastic drop in oil prices actually impacted Abu Dhabi, taking into context your ambitious spending program?
Thank you, Dr. Brian. Our government actually, prior the COVID-19 had plans back in 2007, and even prior that to work towards a Abu Dhabi economic vision 2030, which focuses on building a sustainable and diverse economy, where there was a development of special economic zones, free zones. One of them is Kizad, that was just awarded yesterday in the Middle East Best Free Zone for large tenant award. We have the nuclear, the clean nuclear power plant, Masdar, a city of low carbon development area, which the government has invested heavily to diversify the economy. Another thing is, if we go back then into the 1970s, we have Abu Dhabi Investment Authority, where the oil returns were re-injected in the market through ADIA. So, and going back to oil prices, I don't think it's a major issue for the government, but the returns from the other diversified economies will support in the development of our GDP.
Thank you, Ms. Shuro. Certainly Singapore companies have a choice of going to Abu Dhabi, Dubai. There are other emirates like Fujairah, Sharjah, RAK, etc. And indeed, we have seen Singapore companies operating in the other emirates as well. But you, Abu Dhabi and Dubai are, of course, foremost in the minds of Singapore companies when they look at the UAE market and are examining opportunities there. That's very helpful, the feedback you've given me. One question for you, Shadi, on your presentation. There is a break-even point in the oil price as far as the budget is concerned. And you showed in your chart that the break-even oil price in the UAE has moved up sharply from $40 to around $70 over the past year or so. Whereas on the other hand, the break-even oil price for Oman, Bahrain, and Kuwait and Saudi has been more or less constant or even come down a bit. How do you explain this large increase in the budget break-even point of oil price for the UAE over the past 12 months?
Well, there are a couple of factors here, right? One of them goes back to how the UAE budget is actually placed on. You have to remember that the UAE budget is actually a contributory budget. So we have a federal state budget and we have an individual emirate budget. And the individual emirate budget is that of the Emirate of Abu Dhabi. Now, the break-even price that we mention of oil is largely a reflection of the largest oil exporter in the UAE, which is the Emirate of Abu Dhabi, and it's the largest contributor to the federal budget of the UAE. So you have to keep in mind that Abu Dhabi not only bears on itself its own state-level budget, but also covers a very significant part of federal level expenses. So the adjustment has a number of factors, among them that as a key factor. So there is that distinction between that and some of the other neighboring Gulf states in terms of the oil break-even price. That being said, diversification here is becoming more important of oil revenues. VAT was one stream the government undertook a couple of years back, but I think we're starting to see also a more active role by the government to diversify sources of funding. Building a yield curve at a federal level and at a state local level is a very important aspect of diversifying sources of revenue and reducing that dependency on an oil break-even price. To be honest, the oil break-even price has always been a key challenge, and to be honest, it is an estimate by different economists. We have our own estimates. A number of other entities have their own estimates on that. As long as an entity does not issue, a state does not issue its break-even price, it remains an estimate based on the factors that are visible to us. But that being said, I think there is an importance placed on diversifying sources of revenue, building other funding streams through, for example, bonds to fund the budgets during periods of shortfall, because you do not want to have that over-dependency on oil in terms of financing budget deficits. We're lucky this year, as I alluded to earlier, the budget deficit will still be low, will still be quite low relative to GDP, particularly compared to some of the other neighboring Gulf countries. We've had 2 years of consistent surpluses on the budgets. But that being said, the importance now more than ever is on diversifying sources of revenue and reducing the dependency of oil.
Thank you, Shadi. The next question is from a member of the Chinese Chamber, Mr. Victor Ng, and he's interested in knowing more about areas where 100% investment is allowed, foreign investment is allowed, ownership is allowed. What are these sectors largely, and what are the no-go sectors, and which are the sectors that are particularly important as far as the UAE government is concerned in terms of promoting investments into. So maybe I'll ask Hassan to start off and then Churo to add. Hassan, over to you.
Thank you very much for this question. And of course, when we talk about 100% ownership, there's been recently a law that was mentioned, and you've seen as well within the presentation from our colleagues at Abu Dhabi Chamber of Commerce, mentioned it as well, that looks across 13 different sectors and 122 activities for foreign ownership, 100%. That information is available. I mean, you can actually search it and find it in more details. What is important is that there are multiple options there for businesses when they want to establish in the United Arab Emirates or in Dubai or Abu Dhabi or other Emirates here. That law that has come into effect is one. The other one, of course, is the different free zones that are under different Emirates. In the UAE, we have more than 50 free zones. In Dubai, about 20-something free zones. And they are very specialized in most cases along particular sectors. So you have the Jabal Ali free zone, for example. So if you are looking at doing a lot of these re-export kind of activities to the region and wider region, that might be the perfect setup for you to be present there, because it provides that very unique link between the seaport and the airport there, Jabal Ali Airport, through this corridor where you can ship your shipments from sea to air in a very speedy manner. If you are, for example, into commodities, jewelry, diamonds, then you have another free zone, which is the Dubai DMCC, Dubai Multi Commodity Free Zone. So there are various options, and it all falls within these businesses in terms of what the plans are, what do they want to focus on, and the options are multiple options here in the United Arab Emirates, whether through Dubai, Abu Dhabi, Sharjah, or other Emirates.
Thank you, Hassan. Final comments from you, Shoro, because we are running out of time. We need to conclude the panel discussion. Final comments on the priority areas for investment that Singapore companies should look at seriously as far as Abu Dhabi is concerned.
I think Mr. Hassan has covered mainly. Just a quick maybe advice that we can add is for the companies that are interested in setting up 100% in the UAE, they can always come back to Abu Dhabi Chamber, Dubai Chamber, other chambers for advice, and our legal advisors can provide them with the right consultation.
Thank you very much, panelists, for your very informative answers to the questions. I wish we had more time, but I think we've answered more or less all the questions that were posed to us, and I think we all benefited from your answers tremendously. And thank you again, and I'm happy to pass the microphone back to our MC, Sultan.
Thank you very much, Dr. Brian. Thank you to all the panelists. If you have more questions to ask, you may contact the UAE SPC and the SCCCI directly through their contact details being displayed on the screen now. We now have come to the penultimate part of the webinar. It gives me great pleasure to invite one of the most respected figures in Singapore's international trade scene, Mr. Lee Yi-Shen, to give the closing remarks. Mr. Lee is the chairman of Business China, the patron of the UAE Singapore Business Council, and the former Singapore Senior Minister of State for Trade and Industry. Mr. Lee, off to you, please.
Well, thank you very much for your very kind and gracious introduction. First, let me appreciate the SCCCI and UAE SPC for organizing this webinar. You know, when Brian and I were talking about plans to visit UAE and bringing business delegation, so I recommended to him that why not we work together with existing Singapore groupings like SCCCI. I mean, most of you would know that SCCCI has a very large membership base. Initially, they started off comprising mostly the Chinese, how should I say, the Chinese Tauke, the Chinese, in the olden days was Tauke, but today many of them are tycoons, entrepreneurs, large businesses. But over time, they also have absorbed, companies such as, those from the GLCs and the SME sector. So they are really very a large and established and professional organization. And like most of you suggested, we were having high hopes, with the World Expo and so on in Dubai, and bringing delegations there and welcoming delegations, to facilitate the growth and partnership on both sides. In the past, I had the pleasure of working, with the GCC countries, and I always count our partnership with UAE the most productive and enjoyable, because as the panel speakers have pointed out, Singapore and UAE are very similar. In many areas, we are small. We have limited resources. Well, we say we have limited, but actually, UAE and particularly Abu Dhabi has got the oil and gas reserves. So we are more deprived in that sense. We are much smaller, but our relative small size in our respective regions shape our world perspective. And in my many meetings with UAE Dubai chambers and Abu Dhabi chambers, I think we came to that conclusion that the two countries in the 7 hours flight path apart, serving a different hinterland that we have around us. I think one speaker mentioned that within 8 hours you cover 2 billion population. I think in Singapore, within 7 hours, we cover 3 billion population. And I think more importantly is that this population that we cover are growing in terms of consumption, in terms of need for infrastructure, in terms of energy, in terms of urban planning, in terms of industrialization, and so on. So there is a great two regions for us to serve, and we can't be addressing this market effectively if we don't have partners. So I think from the presentations that we have seen so far, from the macroeconomic analysis of UAE, and too specifically to the updated circumstances of Dubai and Abu Dhabi, and what they are doing in terms of looking forward, I think our businesses will benefit from these insights and to position ourselves for the new normal. In Singapore, it is also the same, that we suffer a great impact on from COVID. Our expected economic growth this year is between -5% to -7%. So I noticed that UAE is -5.5%, so we are about there. Our GDP is similar, although UAE has got a larger population base of 9.7 million. We are very dependent on external trade. We are very dependent on international aviation. Tourism is a large sector, and tourism-related sector, mines and hotels and entertainment and so on. They are large sector for us as well. So while in Singapore, our manufacturing are doing pretty okay. In fact, our electronics and our biopharmaceutical, they are doing pretty well. But the other sectors are struggling. Construction is of course has struggled because of our workers being affected by COVID. And then the other sectors are going on as best as they can. I think the finance sector is doing all right. I think the professional services are doing okay. But we need to find ways to fire up all the different engines. So there are things that we as an economy must do domestically to rebuild this capability, and there are things we must do to accelerate our external growth. So one of the latest measures that Singapore has advocated is to commence our air travel bubble. So meaning we announced that we and Hong Kong will start to figure a way to link up the two safely and with risk management in mind. What does that mean? It means that we will have a standard protocol of swapping passengers before they take the flight to Hong Kong. And upon arrival, they will do what we call the point of care test, which is some simplified test with certain accuracy of knowing that whether this person is infected. They don't have to poke a stick to the nose. Maybe they use saliva or blow air to a certain instruments. So in these ways, because upon arrival, if you are tested negative, you don't have to be quarantined. So it will encourage a lot more business and leisure traveler to travel between the two cities. So we hope to extend this kind of arrangement with key travel cities in the world. So in Singapore, our cities with most flights with Singapore, Hong Kong, Bangkok, Jakarta. Of course, further away, definitely Dubai. All right. So I think maybe with our ambassador, I don't know whether ambassador is still around. Ambassador, we can have some we can initiate this discussion, to explore the possibility of opening up more between Dubai and Singapore. Last year, November, I was in Dubai. Fortunately, COVID hasn't started, and I was in Dubai. I as a tourist for the first time, because in the past I always go there for meeting, but this time, watch a PGA final and then play a few days of golf. So thoroughly enjoying myself, and my wife helped to contribute to the economy with her shopping. So I think this is I think we have to start to look forward to some of these safe opening, between cities that have similar mindset on on reviving the industry and practice on the safe protocol, as well as methods to mitigate the spread of this pandemic. So I want to end by thanking again, adding my thanks to all the panel speakers for giving your insights, and many of your places you mentioned, the things that the industries that that you have developed. I have visited them before, including Master City and so on. So I look forward to our businesses going there to experience for yourself what UAE has to offer in terms of it as a gateway city and also the region as their hinterland. So with that, thank you all very much and all the best and stay safe.
Thank you very much, Mr. Lee. We have now come to the end of business opportunities in the UAE impact of COVID-19 webinar organized by the UAE Singapore Business Council and the Singapore Chinese Chamber of Commerce and Industry. As mentioned, we will be sending the slide presentations and video of the webinar to all attendees as soon as they are ready for distribution. On behalf of the organizers, UAE SBC and SCCCI, and the supporting partners, the UAE Embassy, the Abu Dhabi Chamber, and the Dubai Chamber, I thank you for your kind attention and participation. Thank you all and stay safe. Thank you.